Hi, this is James Shrug with Westpac London's end of day report for Monday the 19th of November, after an absence of 2 days at the end of last week. Look, really just one story in town. I mean, President Obama's comments at the weekend that expressing confidence that he'll win Congress support for a deal that will avoid the worst of the fiscal cliff in early 2013, generating a lot of risk appetite today. They followed, of course, comments from the Republican side on Friday after the London close, expressing a sentiment along the lines of being willing to compromise somewhat. So European markets didn't get to benefit from that Friday news, and certainly rallied on the Obama comments at the weekend, as indeed did US markets today. There was some other news on the economy, but it was fairly minor. Existing home sales rose 2% in September in the US. That reversed a fall of 2.9%, not fully reversed, a fall of 2.9% in the previous month. The underlying story there, though, is one of broad stability in existing home sales. Inventories of unsold homes are now running a 5.4 month pace to clear, which is the lowest since early 2006. And that may be one reason why the US National Association of Home Builders Confidence Index jumped another 5 points from 41 to 46, which is a 6-year high. So the new housing market seems to be benefiting from this lower inventory of unsold existing homes, which, as I say, is back at levels seen just after the housing market peaked in 2005. So broadly good news on the housing market in the US. In the UK, we saw house prices down in November, 2.6%. These figures aren't seasonally adjusted. The annual price gain there was 2%. And in fact in London up almost 9%. So a little bit of positive news there, I suppose, as well. But that's really it on the data front today. We've got a few things to look forward to, though. The Reserve Bank is going to publish the minutes to the November meeting when they didn't cut rates. Then we've got Reserve Bank Governor Stevens giving a speech in Melbourne. And of course tomorrow we get EU finance ministers meeting again to discuss the Greek bailout, which Greece looks like they're going to get, but there are still some unresolved issues, including how is it going to be funded, the extra 2 years. Some reports today saying the extra 2 years to get to 2% of GDP deficit from 2014 to 2016 is not actually a done deal yet, and the IMF is certainly raising a lot of questions about the whole process. And their participation in it might even be in question. So lots of issues to be resolved. That's an important meeting to watch for. The other thing I mentioned too is that one news wire reported that the Aussie and Canadian dollars are going to be included in the IMF's register of reserve currencies, which means that IMF members from next year will report their holdings of those currencies. This is great because up until now we've only sort of guesstimated, made educated guesses about the extent to which Aussie dollars are held as reserves by maybe as many as 40 central banks globally now. So that news was certainly of interest to us economists. Now, that's about it in terms of the news today. In terms of markets then, we've got in Europe, the FTSE in London up 2.4%. The FTSE was a laggard today with a 2.4% gain, along with Spain. The French market up 3%, the Italian market up 3%, and the German market up 2.5% today. And the Dow, as I speak, at about 5:45 in London, up 1.4%. So just halfway through the session there. The Aussie dollar at 1.0402 is up about a cent compared to where it was on Friday afternoon. So that risk asset clearly benefiting, as indeed did commodity prices, with gold up more than 1% today. It's at $1,735 an ounce. Copper prices are up 2.5% and oil prices up 2.8% at $89.36 a barrel. All right, that's it for today. I'll be back again same time tomorrow.